Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Monday. It's May 14th, 2012, and we're seeing a breakdown of the markets we've been talking about for the past couple of weeks here. That this low points here, looking at the Dow Jones Industrial Average right now, this low point here, and here we get close to it, was showing a support line that we had here and we were bouncing around at. But we didn't like how this low point formed, or this one here, or this one here, and so we said that this was actually going to break down, and that's what we're seeing here. And that's an important factor because it's something we talked about in the past, is you basically had a triple top forming up here, and we were looking that whenever you've got that formation, the lowest point in that overall formation, we had the first one here, second one could be here, and third one way over here. When you have that scenario, you want to look at the lowest point way back here and find that when that breaks down, we close below that like we did today. That's confirming that triple top. That's when you can finally say, yes, we have a triple top. So at that point, you can actually do a couple different things. One of the things you can do is get a target for how long you expect price to go. You measure this distance from the high point here down to the low point here, do the math on that, subtract that from the breakout point, and you get an idea for how far you can fall. It's just a target, not something you should bet the farm on, but it's for something for you guys maybe looking at this chart saying, you know, we've been down for about 2 weeks now, we're moving into 2 weeks. I don't want to jump on the short side. I don't want to try to short when it's already missed the opportunity. I don't think, in fact, you have. I think this is actually just getting started. If we look at the longer term chart, you'll see a bit more. Okay, here I'm looking at a longer term chart. Each one of these candlesticks represents a single month, and we had to take note that the current candlestick, this big red candlestick you see right now, is for the month of May, and it's still forming, but that right now is what we're looking at. So when you're looking at the market saying, I think we're, we've gone too far, we're going to bounce, something like that, keep in mind that in the overall bigger picture, we had 7 consecutive months to the upside, and this is just the first start of a month to the downside. That makes perfect sense to me. I think we could still see plenty more move to the downside. On top of this, on the longer term chart, certain indicators such as the RSI and the MACD, they're indicating that this high point here and this high point, our higher high right here, we have this little uptrend, is actually false. So they're indicating that this is a bearish divergence, and basically that this rally here is fake, unsustainable, and therefore the move lower is going to be substantial. So that's something else to take into account. Not all indicators are confirming that, but there are 2 strong ones out there that are, so it's something else to take note of. The last item I want to discuss here on the Dow Jones Industrial Average is that support line that we have now closed below. This dotted blue line here, it's on this chart. We've now closed below that. That means that this support is likely to turn into resistance. So a couple days to the downside, oftentimes you'll see that, and then you'll see a little bounce to the upside that'll come up there and flirt with that level, prove it to be resistance, and then we'll see a move away from it again. So that's important to note as well. Let's take a quick look here at the NASDAQ, and this one, like we talked about with the Dow Jones and Russell and several others, we talked about this low point here being taken out. That was confirmed today, as we've now closed lower. Here's the close on this candlestick formation. Here's the close on this one. It's obviously a lower close. We've also already taken out the low point to 2900.28 versus 2900.06. We've already done that as well. A couple days ago we talked about that as well. Again, this is a situation we talked about last Friday as being something you could take a short opportunity the following day, which would be today, had there been a lower low than this point here. You got that at the open. Any of the counter trend rally you saw intraday today would have been a great shorting opportunity. If you took advantage of that opportunity, you're now happy right now, sitting on a little tight profit. Just keep your stop where it's at. When she continues to go low, we'll start advancing our stops on that. Again, with this one, you may be looking at it saying she's been moving to the downside for a few weeks here. I think it's kind of late, but again, let's have a look at the longer term charts. The 10-year monthly chart here on the NASDAQ, we show that we are starting the second month in the red here. Again, this kind of is still being formed, but we are seeing lower lows and lower highs from 1 month to the next. Here's a lower high from the previous, and there's another one here, lower low point here, and a lower low here. We are in a downtrend. Also, with this particular average, this run here is being considered a bearish divergence by several of the indicators on the NASDAQ, including the RSI, the slow stotch, the MACD, and just a lot of them just indicating this to be all fake and will be taken out. So there's still a bigger move to the downside in play here. The Russell 2000 Small Cap Index, this one we've been talking about for several weeks, actually discussing this. We started way back here before you can even see it on the chart now. Here's the shoulder formation, the first shoulder, then the head formation here, and then the second shoulder formation. We told you we saw this developing here as being a head and shoulders formation, but wouldn't be confirmed until we closed below the neckline, which you measure out from the start of the head to the end of the head formation, draw a line there. and that's your neckline. Once you close below that like you did today, you have confirmed this is a head and shoulders pattern, which is a major peaking signal for a major move to the downside. You simply measure this distance out from the high point of 847.92 down to the neckline, do the math on that, then subtract that number from the breakout point here, and you've got a target for how low you expect price to fall. And right now, again, for those of you looking at this thinking maybe it's gone too far, you don't want to jump on it now, you're just now getting your breakout. So this is a breakout not to the upside but to the downside. You can get short here with a stop where we showing it, or we have indicated it on the chart. And as always, these charts are updated every single night and kept on our free website at perfectstockalert.com. You can check it out whenever you'd like there. And we also update whenever we advance our stops or see another entry opportunity, which, by the way, I do see an entry opportunity on the FTSE or the London Financial Times Index. So if you go to the website, you can check it out there. I'm not going to put it in this video, but it is updated on the site. Looking at the Russell 2000 Small Cap Index, the monthly chart, the 10-year monthly chart, each one of these candlesticks, again, being 1 month activity, so this candlestick formation is still forming. But you can see here that we have a series of lower highs, high point here, a lower high here. That means we're testing this low, so this is something to pay attention to. And again, indicating another bigger drop to the downside is potential to happen here, so I wouldn't be squirmish about getting short at this time. The S&P 500 Large Cap Index also breaking down the support that we had been bounced off of before. This low point we told you would be taken out, and we have done so at this point. Again, this is something that I see as a major opportunity for bears. You have this high point here, a lower series of highs here, a low point here, and a lower low here. Any move that you have to the upside at this point would simply be an opportunity for bears to come in and short. You look for a counter trend move like this, and you get short. That's what I would do. Longer term chart of the S&P, or the SPX I should say, showing the S&P 500. This one also showing this just getting started on the downside here, and this indication here we see on the this uptrend here from this high point here and a higher close here. When we draw the trend line there, that's considered a bearish divergence by several of the indicators on the longer term 10-year monthly chart, including the RSI, the MACD, and the slow stotch. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend, aka share our videos online. Also, if there's anything in these videos that I've discussed that you don't understand, head and shoulders patterns, etc., whatever it is, we have an entire tutorial library there in video format you may check out whenever you like. God bless, take care, enjoy your evening, and I'll see you all tomorrow. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.